Ross Gerber joining us from Gerber Kawasaki, the CEO of the firm, and of course, a big Tesla bull. But lately, Ross, you've been sharing your Twitter about half and half Tesla and anger at Jay Powell and the Fed for hiking rates and putting us at recession risk. So you feeling better after yesterday?
Well, no. I mean, I still very much feel that the Fed's working on a lagging indicator playbook and clearly just isn't looking at any of the leading indicators that's showing that we're going into a recession. And I just don't understand the logic of running our country into a recession, thinking that that's somehow going to stop, energy inflation.
Do you think that we have taken a step towards averting potential recession or downside? Yield curve still is screaming out problems, if you believe that.
Yeah, I believe the bond market, and I've been in the bond market for months now, buying all this yield that the government's giving us. I mean, Powell's not looking at it from the other perspective, which is the U.S. government is the biggest debtor to all of us, and now he's making the U.S. government pay substantially more for its debt, which is actually potentially going to break our government. Like, where are we going to get $500 or $600 billion a year extra to pay this interest? So I think there's a very short-sightedness in the Fed and not really fully understanding the way the world works anymore, because they live in ivory towers and they don't actually know how the world really works anymore.
How is that recession risk working its way into your strategy? I mean, is this just giving you an opportunity to own the growth themes that you like? You might have to wait longer for them to pay off, or you mentioned buying the bond part of it. We've talked about that. I think that was a distinct change that you made over the last 6 months.
Right. Well, if they're giving you yield, you got to take the yield. When you can guarantee a client from the U.S. government over 4%, when inflation has averaged 2% over the long term, that's the best yields, real yields we've seen in government securities over the long term in 20 years, And then we're looking at REITs and we're looking at high yields and even some of the, sort of higher risk areas over 10% yield. So, we love playing in areas where we can get income paid to us. Now, on the other side of the coin, many stocks are quite cheap right now. And if you look out past the first quarter, maybe 2 quarters, the Fed will have to be lowering interest rates, or some stimulus will have to come into the economy at some point next year, which will then create, I think, better opportunity for investors. But we have a very unique situation with very low unemployment and lots of people still spending money, while other areas of the economy, like housing, where interest rates are very, very important, have come to a complete stop. So they've created a really interesting set of imbalances, which is what really concerns me, where they're cutting jobs in certain areas. In other areas, there's still lots of demand for labor. So I don't really get what the Fed's end game here, other than forcing us into a recession, and that's my criticism.
And okay, so I like the macro view here to get into your mind. When it comes to the ways the stock market has responded to this, there's been strength in the Dow. There's been strength in industrials, kind of more value stuff. A few of the tech names are holding in there, but Tesla going in the same direction as Meta, making lower lows, as Alphabet. How do you feel with that stock being looped in with other places where they're making cuts and they've made like total strategy blunders in the case of Meta, or where advertising is drying up, or where Alphabet's moonshots are like doing nothing for them right now? How can Tesla's getting mixed up in that group?
Well, that's sort of a weird thing, because you have big cap tech, which to me we're going to see probably layoffs and really thinning the ranks here so that they can increase their profits next year, because on their current paths, these big cap techs have limited profit growth moving forward, where Tesla has 50+% profit growth looking forward for a long time ahead. Tesla is only down because of Elon Musk deciding to become the arbitrator of speech on Twitter, which clearly institutional investors, don't want to be a part of. And I'll give you an example. I'm just looking at Kanye West. He's a disgrace to people, and he's just a disgrace, this guy. And he's tweeting away, and it's infuriating me. But it is, it's free speech. He hasn't said anything that, in my mind, violates the terms of service. But is this really the best use of Elon Musk's brain power, dealing with idiots like Kanye West, versus focusing on building robots, and
well, he's got Neuralink. He seems pretty focused. He's got Neuralink and he's got a new semi-truck.
Yeah, I think the team at Tesla has done a phenomenal job. So let's give credit where credit's due. It's the team at Tesla that's building Tesla right now, because Elon's not there. And so, the team at Tesla is amazing. I give them all the credit. I'm super bullish on the future of Tesla, and Elon will refocus again on Tesla probably early next year, and they'll get some stability back at Twitter, and I think he'll be successful at Twitter, but I just don't really see this as the best use of his time and energy.
Hey, quick, Ross, the semi-truck, after a couple years of teasing it, we're going to get the Unveil. Is this a market mover? Is this something that's going to meaningfully contribute to their sales anytime soon?
Absolutely. You know, these are expensive trucks, first of all. And second of all, that's what they're doing here in Texas is building trucks. And it starts with the Semi and it moves to the Cyber. And it's all based around new technology in the 4680 cell. And this is the most monumental moment in Tesla's history since the launch of the Model S. And it's amazing that the market doesn't get this because they're so worried about Kanye West and Elon Musk and Twitter, which has no economic impact on Tesla at all. And here they are launching, I think, one of the most impactful products since the Model S. And it's like the market doesn't get it at all. So for investors, this is like 2009 all over again at Tesla. You know, it's hard not to like the stock down here at 30 times forward earnings. Of course, there's risk because Elon is a crazy man. But you know what? Welcome to Elon. He's made us all a ton of money, and you got to bet with this guy.
Who among us isn't a little bit? Okay, Ross, always good to catch up. Do appreciate your input.
Hey, thank you.
Absolutely. Ross Gerber, President and CEO at Gerber Kawasaki.